The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
For over 95 years, we've set the bar. Power, we restored it. Protection, we reinvented it. Record yields, we redefined it. If there's one thing we know at FS, it's that just because something hasn't been done, doesn't mean it can't be done. We're never satisfied unless we take your farming operation to the next level. Run your equipment at peak efficiency and bust the bins this season. Visit fssystem.com.
Well, on Thursday's market trade, wheat was able to climb its way a bit higher, with corn closely following behind in second place. Soybeans got pulled higher too. Hogs had a really good day. We still saw crude oil leak lower, a little bit of pressure in cattle. Plenty to take a look at. Joining us here today, we welcome in Kristi Van Ahn-Kjeseth with Van Ahn and Company joining us here on Market Talk. Kristi, always great to have you on the show. I hope you're doing well.
Yeah, you too. It's great, especially days like this. These are the fun days.
These are the fun days. We had some green on the screen to talk about, Kristi. And I mentioned that wheat market, bit of a rally there. I'm wondering, was this a case of maybe just a little bit of short covering in wheat that helped pull corn and beans higher too, or what was the cause on Thursday? What do you think?
Yeah, I think wheat, we had a strong day Monday, Tuesday, and then yesterday we gave back a bunch in wheat. And I was staring at my screen. I'm like, yep, this is wheat. Here we go. Have a couple days, pull it all back. And we get ourselves nowhere. Then we came in today and it seemed like the buyers kind of built off each other. It almost felt like a snowball situation where you started to see the momentum just build and build. And you had all these people want to jump on the buy board for not just wheat, but the corn and soybean market. Soybeans were a little bit slow to join on that trend. But overall, you did see them start to build on there. I think some of it has to do with the fact that we've really had escalations between Russia and Ukraine over the last month or so, and the market really hasn't built any premium into it. In fact, it's been the opposite, right? We were at lows that we haven't seen in 2 years for the wheat market. So I think you're starting to build that premium in there. And seasonally, this is when the markets start to really find buyers. It's October 1st for corn and soybeans, and it's mid-September for the wheat market. And so we've passed that point, and you haven't been able to. So I think you're finally starting to get those buyers built into the market and want to be a part of it. I do think that wheat rallying is a key part to corn and soybeans being able to make something of themselves in the month of October. It's very important to have wheat be part of the party when you see this market rally. So I think this day was the ticket. Soybean market is brutal when you look at a chart. It's not pretty. It's if you were to look at a chart and not know what it is, you'd want to be a seller of this. And so it's done a good job trying to shake off some of this pressure. We've been holding this 1260 level. And I think if we can get through $13 on November soybeans, that's going to be the ticket to be able to get this market going. But it really is the last one to come along. It feels like it doesn't really want to come. So it takes a little bit for it to get going, but it was impressive to see it be able to build. Corn is the one that I'm looking at the most and saying, hey, I really like the way corn looks on a chart right now. I like the way corn feels. We got through 490 finally today. And then it's like as soon as you got through 490, we built off that and we're able to. Now, the tough thing with corn is that you have multiple levels of resistance points. So you're going to have that psychological selling pressure in at $5. And we saw that show up at 498.5 today. So that barrier, I think, is going to be a little bit tough. And then you're really looking at every 10 cents, almost a resistance point around 511. And then 523 is a target we're really zoning in on for the corn market. And we'll most likely, if we can get there, do some form of marketing. Maybe that's just puts. But if you're comfortable making sales, I'm not ruling out sales at 523 for December futures either.
Well, trying to find that demand and kind of opening our demand windows. I know basis has kind of fallen back here as of late. So I would have to think if we could start to find some demand, that could bring basis back in a little bit. But talk to me about just the cash market side of this equation. What are you seeing with basis? And to add to that, are farmers actually selling off the combine right now, or are they putting a lot of this in the grain bin?
Yeah, so people are going to eat me alive. But when I make the comment that people, that yields are for the most part, you're starting to hear these better than expected. And I think the key is better than expected. So it's not like these are fantastic yields. It's not like these are just monster yields. It's just where we thought we were. They were coming in a little bit better than that. And I think that's flushing out some more grain than we anticipated due to storage space. And I think the key is going to be who's willing to pay DP, the storage rates, and who's not. So those storage rates should be more expensive than they have been in years past because of interest rates and the carry in the market. And so you should be looking at coming into a situation where you've been charged 5 cents a month in the past, maybe looking at something 7 to 9 cents. So I wouldn't be surprised if you see those costs being a little bit more. I think that could cause some farmers to go ahead and just sell straight off of it. But what I'm seeing is basis levels right now are really not great. So you have, I think, commercials looking at saying, hey, we know that there's going to be some more than we thought coming in. We didn't have a lot of producers sell prior to this. That's the general consensus that I see from the market, is that farmers just, they did a good job on last year's marketing, but they're sitting here and saying when they got the opportunities this year, they just didn't know how their crop looked, especially for soybeans. Soybeans took a really long time to come out of that really bad looking short feel for the market. And so I think that you're going to see some people hold on to the grain. I think you're going to have the conversation of a lot of grain going on the ground. We've already heard that quite a bit. And I think if you can, I don't like putting grain on the ground. I'd be willing to pay storage rates for a couple months, but I think if you could get past harvest, I think that's where you could really see some basis improvements come. So I'm actually really friendly basis opportunities at the end of November, December, beginning of January, because I do feel like once these guys get done with harvest, lock the bin doors, it's going to take a while before they're willing to sell this market.
Is the pullback in crude, is that keeping a bit of a lid on the grain market right now, Kristi?
Yeah, I think overall what we saw coming in like the end of last week, right? End of the week, end of the month, end of the quarter. And then your whole issues with the government shutdown. I think those are some concerns that have this market kind of on standby. And it seems like the market was able to do a good job shrugging them off. But this is something we are going to deal with for the next 45 days at least, right? The government shutdown got pushed back 45 days. So we know that it's going to have to get dealt with. In that meantime, we're going to have another discussion about interest rates. In that meantime, we're also going to be looking at our government having some issues with who is the speaker for the Republican Party. And so you're looking at all of these aspects put into it, and you feel like it's a little bit chaotic. And the chaos is coming at a really bad time frame when you're very sensitive about the economic concerns. And we've had people for years be talking about a recession, and now you're coming into people really backed off of the recession talk. They said, okay, we put a pause on raising interest rates, maybe we aren't going to see this recession. You had people talk about that, and then all of a sudden you got hit with government shutdown, potential another one. Treasury bonds are just absolutely getting pounded lately, which is a sign that people think that interest rates could come up once again. The housing market looks to be kind of drying up and stopping. And now it feels like you have those people really looking at the chance for a recession. And I think that's where you're seeing that pullback in crude, is you built it so high off of tight supplies. And now you're coming in here and saying, is this real that we could be seeing a government slow down, economic slowdown? We're coming into a time frame that is so important with Christmas shopping. I mean, it's going to be right around the corner that you're talking about that. Are you going to have people start to scale back on trips, on travel, all of those things? And I think that's where you see that pullback. And I'm not so sure it's really affecting the grain markets right now. I think it did last week, but I feel like it's going to be a constant thorn in the side of these markets, that anytime they really want to put something together in the backdrop, there's going to be somebody saying, hey, what about this economic uncertainty we have?
Hog Market had a really solid day on Thursday. Cattle were mixed to lower. I have to think, in the case of hogs, was it all tied to that impressive weekly export sales number that we saw, Kristi?
Yeah, I think it's a little bit of that. I also think that not to like beat a dead horse, but that economic uncertainty that you have of saying, hey, beef is really expensive. Look how cheap pork is. We really slashed the price here over the Prop 12 issue and was worried about that. We had liquidation from some closures of some big hog plants or hog farms, and coming in here and saying, okay, now we can take a breather. We just need to cash confirm this. But are we going to see domestic demand for hogs be the shining star moving forward to be able to handle this?
All right. Well, Kristi, before we let you go, any final thoughts you want to share with us here today? I know we hit on a couple of things real quick. Anything else you want to share or reiterate to folks today?
Yeah, I think the big things is really just to focus on what you really want to get gone and out the door and sold and cash in hand in the next 60 days. I think if you can focus on that, I think you have some time to focus on the rest. But 523 big level we're looking at in D's corn. Hopefully we can get above that 13, but if you can secure $13 cash for your soybeans, that's my next target of looking at that. And hopefully we'll be able to get this up and going for the wheat complex, but it's got some work to do.
Kristi, if folks have questions, I know they can reach out to you and the team there at Van Ahn and Company very easily. How can they get a hold of you?
You can call us at 1-800-648-5494.
And I know they can find you as well at vanonco.com. Kristi Ahn-Kjeseth with Van Ahn and Company. Thanks for joining us here on Market Talk today. We appreciate it.
Thank you.